Hello and welcome to Economy and Markets TV, where we have conversations with a purpose. I'm your host, Dave Okenquist, Senior Research Analyst here at Dent Research. Joining me to take you around the world of economic and financial news and hopefully covering each topic in 2 minutes or less is the editor of Boom and Bust, Mr. Rodney Johnson. Rodney, good morning.
Morning, Dave.
Rodney, let's get into the news, which is that, at least to me, in a broad sense, is that the markets really have been roiled, starting with Wednesday, where the Fed cut rates by 1/4%, as expected. Although there was some, these betting sites were saying 0.5%, but that just never did materialize. Also of note, when Chair Powell spoke, he sort of said, maybe we'll cut later. That'll be the subsequent meeting, September, December, or maybe we won't. And the markets just did not like this news. So let's talk a little bit about why, and then just secondary, if we can get to it, what's going on in the bond market as well, because I know that's sort of your area.
It is. The Fed's premise was, look, we cut interest rates, even though the economy is moderate, as we talked about last week and have talked about for months. So the economy is doing okay. Inflation's not where they want it. But why are they cutting rates in the first place? And it's something, that we've discussed, the uneasiness with the trade war. You're looking at business investment that's actually low, but consumer spending, as we found out last week with GDP, is pretty strong. And so what is it that they're trying to do? And so they said this is kind of an insurance cut, right? Kind of to prevent against something that might happen in the future. But that's a really unusual reason to change interest rates. I mean, it's a big thing to change interest rates. And so to change them just once is, I don't know that it has happened. I mean, maybe it has. I haven't looked through the history of the Fed to see, but it's very unusual if it has happened for them to change direction from tightening in December to neutral in the spring to now easing and to do just one cut. And so everyone expected not one, but 2 or 3. The question was 2 or 3 this year. Is it July and September, or July and December, right? And so for Fed Chair Powell to come out and say, look, this isn't part of a series, everybody's like, wait a second, they're always part of a series. And so that was a huge change. And then later in his press conference, he backtracked and said, well, we're still looking, we don't know. But he injected the uncertainty. And so the markets went from okay to down 400 in a matter of minutes, came back some, and we're kind of, treading water because people still don't know. So it puts everybody back on tenterhooks between now and the September meeting to say, in an odd way, will we get enough bad news or subdued news to move the Fed to lower rates again, back in line with what investors want? Really weird, but people are kind of looking for a little bit negative news so they get that Fed rate cut.
No, is this becoming a case where some people might say this has been going on for a decade, but is the Fed beginning to lose credibility?
No, I don't think so, because what credibility? And I don't say that facetiously. I'm not saying that they have zero. I mean, they're the central bankers of the reserve currency of the planet. And so they have heft. What they do matters. It could be that people feel there's been a stutter step in terms of communication and forward direction. But, for people as old as I am who've been doing this, they didn't announce their decisions as late as the 1990s. They literally didn't tell you what they had decided. You had to go to the discount window and start, financing to figure it out. And so this whole, press conference immediately afterwards, it just started with Ben Bernanke. And so it's a very recent thing that we're still trying to get our arms around, understanding their reason for doing things. And I know I've gone over my 2 minutes, but I think something that we're discounting here is we're playing a little bit of defense against the other central banks of the world. The European Central Bank is looking at lowering rates below negative 40 basis points to further negative and starting bond buying again, both of which will devalue the euro some. And so this is about making sure the dollar doesn't get, much stronger compared to other currencies and puts us in a worse trade position. And so it could just be defense, and once and done is the thing to do.
Yeah, great points, Rodney. And yes, these press conferences, it's probably why the language is it becomes almost farcical with their very specifically, understood term, which is going to dictate how all of the international markets are supposed to react based on, a couple of changes of a word here or there. It does seem to be a little bit of a circus. So, Rodney, you mentioned that the Fed is saying underlying issues with the economy or just sort of flatness, and I think that was epitomized this morning by the jobs report. The U.S.
Yeah.
economy added 164,000 jobs in July, which is basically in line with expectations. The one positive, though, that does continue to go is wage growth up 3.2% year over year. That was a little bit above expectations. The only downside there, average hourly hours just dipped a bit, and the unemployment rate is flat at near all-time lows. So is this one, is that, do you agree with that, that this sort of epitomizes what's going on under the hood?
Yeah, a bit of a nothing burger, right? I mean, wages are coming back, which is good, or growing a little faster than inflation. We're excited, and you got to put this in context. We're excited that wages are growing about 1.25% faster than inflation. 1.25% over a year. I mean, come on. I mean, you're making $50,000 a year and you're going to make $50,520. And so
Right.
you're happy to get it. I'm not saying that. I'm saying we have to put it in perspective of it's the right direction, but the magnitude is not worth getting excited over because it would take a long time for that wage growth to overcome the incredible run up in the price of housing, the price of education, the price of healthcare. I mean, we're out of whack. Wages didn't grow for a couple of decades, and now here we are trying to catch up with the cost of living. It's going to take a long time.
Yeah, we certainly needed a few more years of this kind of sustained, real growth in wages compared. I mean, really going back, well, if you look, some people say if you just back all the way to the late 60s when this sort of stagnation has been going on, but of course, more recently with the Great Recession. Since we ran a little over on the Fed, let's just move on to our next topic, which is the other thing that roiled the markets, and a little news update to the trade war, Rodney. Seemingly out of nowhere, but I don't think so. The president announced we're going to slap an additional 10% on the remaining $300 billion worth of goods coming from China. Of course, we have that 25% and that 250. So you add that up, it's about 550 billion, which is roughly what we trade or import from China every year. So, Rodney, do you think this was Trump planning on making this announcement and waiting for the rate cut, or did you think this sort of happened organically?
I think it happened with negotiations. They had another round of negotiations. They're kind of at a standstill. The Chinese play the long ball. As somebody wrote the other day, this has gone on for so long, 15, 17 months now, that the Chinese might be looking for another 14, 16 months from now and saying, look, let's just wait it out. I mean, we're already here. Let them slap a little bit more tariff on there, and we'll wait to see if there's a regime change in the United States, meaning we get a Democrat in office in November of 2020, and negotiate with people who might be more to our liking.
Right.
And so this, I mean, I clearly am on record thinking it was going to last a few months back in the summer of 2018. I was wrong, and it looks like it can go on for a long time. Question is it causing a true burden in the United States? Generally, clearly there are individual industries that are suffering with this, but everybody's kind of rocking along, and our consumer spending numbers show that. And you got to go back to the difference between services and goods. Goods obviously have tariffs on them. There are no tariffs on services. You go down the street, somebody mows your grass, somebody serves you a meal, whatever. None of that's affected. It's when you're buying a product, you're buying an iPad, you're buying something else, and the number change isn't big enough yet to cause a ripple for people. It is causing some issues in individual businesses, but by and large, people aren't noticing. On the flip side, I will tell you, we've got a deficit of more than $1 trillion. Tariffs go into the general tax revenue. And so when you charge a tariff, 10% on $300 billion worth of goods, you're charging $30 billion. That's just one more tax that we as a nation pay. The Chinese don't pay it, we pay it, and it goes right to the bottom line of the US government to offset a very small part of the deficit.
And to your earlier point, Rodney, the president has been making that argument for campaigning, like, hey, the Chinese are trying to wait me out so they can get a better deal. So, and I wonder just well, I had suggested this maybe a few weeks ago, that I don't know that there is a deal. I wonder if tariffs are the deal, and if maybe tariffs might end up being the best deal the U.S. can get, because it seems like, at least, I'm not reading on the China side as much, but it seems like there's an agreement, something that happened, especially with Chinese were supposedly agreed to be buying more soybeans. That just never materialized, and that seems to be always the sticking point, enforcement and getting it through.
Well, remember the backside, the way this could run off without a deal with China is that the thing we talked about, a couple of weeks ago, of China plus one, is that companies that currently source everything in China move to other nations, Vietnam, Cambodia, Laos, Thailand. And so it could be that instead of getting a much better deal with China, we just instead increase our trade with these other nations where companies move to, where we have a better trade deal to begin with. And so that would be a very big negative for the Chinese, because what we do matters, right? We're the largest economy on the planet. And so if we do this, the next person who's going to set up shop who is French or German or English or Italian is probably going to do it in Cambodia or Thailand or wherever, following us and following that supply chain, versus one more in China if they can get the deal we get. So we have a couple of ways of pressuring them, and it doesn't mean that we have to actually give in.
Absolutely. Now, Rodney, I get delivery to my house for dinner probably more than I should, sometimes 2-3 times a week. And this story that you found this week kind of made me laugh, but made me a little scared. A survey of, they surveyed delivery people, and about half of the people said, the driver said they were tempted to eat the food, and then about 25% said they actually dipped their fingers in and ate the customer's food before it got to their house.
Right.
How do you?
It's kind of a sampling, right? It's U.S. Foods who did this, and they surveyed delivery people, and they surveyed on a number of different topics. One of them they asked is, were you tempted by the food you were delivering? And 54% said, yeah, I really was. And they said, well, have you ever taken some, like, a couple of fries or whatever? And half of the half, or as you say, about 25% or 1 in 4 said, yeah, I've actually eaten some customers' food. Now, you can't go from that to 25% of food delivered has been sampled by your delivery person. Right, it means that 25% said at least one time they had. So, it could be a very small number. The problem is, how do you know it's not yours? And so, of course, the way to resolve this is for food preparers, being restaurants or whatever, to use tamper-proof packaging so that when they hand it off to the delivery person, if it's been opened, they can tell. That's going to be a big change to get people to do it. Will they? I don't know. But it's one more thing where you look at it and go, who would think of that, right? Who would think open up somebody else's food and eat out of it? So, I've actually never used DoorDash or Grubhub, so it doesn't affect me.
So it is very, I mean, I'd say it's tempting. I might say it's tempting, but I've never do it. But, you get some nice smelling food next to you. You're waiting at a long red light. No.
Well, but when it's your food, I mean, but yeah. And I must admit, I have stolen French fries from my children on the drive from the restaurant to the house. Right. Yeah. But somebody else's food, I just can't go there. Nope. Doesn't work for me.
No. So let's hope this survey was very unscientific and far less people are dipping in, but certainly that tamper-proof packaging, maybe it could be like a seal from the Middle Ages, like a wax seal on the
wax
clamshell package.
Probably more likely a piece of tape of some sort that, when you try to peel it off, the strapping comes off of it or something. But yeah, it can be done.
Absolutely. Rodney, looking ahead to next week, apparently, Rodney, you say there's nothing going on. There's no news.
I looked through the list. There's really nothing. I mean, I would like to highlight a couple just to make it sound good, but that would really be lying about it. Yeah. We're going to have the tail end of earnings season. That's kind of over. You'll have people kind of going through earnings and saying, hey, look, it turned out better than expected. But guess what? It always turns out better than expected because companies guide down, down, down. So they could say, hey, look, we beat. But still expect earnings to be around 0 or a little bit negative. And then it's going to be about forecasting where we're headed next. Buybacks are a little bit interesting. And then, of course, it's all politics. I mean, the race to September debates, who's qualifying, who isn't on the Democratic side, that's going to be interesting. And the trade war, we just saw the latest spat in that. So I think it's going to be all about things away from the markets.
Absolutely. But we will be here to cover whatever comes up that week next Friday. If you have any questions on the markets or anything going on in the economy, what's going on? What do you think about the trade war? What did you think about the Fed lowering rates? Send those to tv@economyandmarkets.com. For Rodney Johnson, I'm Dave Okenquist, and this has been Economy and Markets TV.